It's Monday, April 5th. This is The Street Live. I'm Catherine Ross, and I am joined by Jim Cramer. Jim, let's kick it off with the markets. We are in the green today. What are you going to be watching?
Well, look, I think the main thing is what happened Friday. We got a robust, really fabulous employment number. Lots of people hired, but no wage growth to speak of. As a matter of fact, negative wages, which is the green light for Jay Powell to stay easy. Now, it is true there is commodity inflation throughout the system. But remember, when he said last that he would keep rates low, he said there'd be a spike in commodity inflation. And that's what we're getting, so don't panic.
So let's talk about GameStop, because they are planning a stock sale of 3.5 million shares. And this is something that you personally, Jim, have been wanting to hear from the company for a while now. But I want to back up and actually ask you, how have you changed your mind on GameStop? And what kind of advice do you suggest for investors to approach this name?
Okay, so GameStop, it's an $11 billion company. It has not done well. It has been bad for a long time. It's out 12 billion now. Here's what you need to know. I mean, I had Paul Raines on all the time, the late CEO, and they kept trying to reinvent. But they would run short. They did a swag initiative. I mean, ever since games became digital, they really haven't had much of a chance to make a lot of money. I think that the current company is not what the new company will look like. I think this is a company that is going to be involved in e-gaming. Maybe it even sponsors e-gaming at the college level with NCAA scholarships. I think that all the prizes, they may do prizes, and the prizes might be in Ethereum or Bitcoin. I do think that they have a lot of momentum in the gaming industry. If you're doing e-gaming, now that we're in a situation where we're going to be wide open because everybody gets vaccinated, so you can play against each other in a giant gaming hall. The latency will be very little in the games, so there's so much they can do, but they need some capital, and they're not really hurting the stock. They're doing it at the market, which is why it's absurd that the stock's down so much. A lot of times I feel like when I'm on the side of the Wall Street bets and Reddit, they somehow manage to castigate me. And it's really crazy. I mean, because I've been saying over and over again, they got to raise capital in order to be able to sustain it. Why do they dispute what I say? I think a lot of it is because they think I'm some great manipulator. I mean, I've been a hedge fund manager for 21 years. And I don't talk to hedge funds. I'm just looking at the situation. And I'm saying this is what I'd do if I were GameStop. But, they're naturally suspicious. And I think it's a shame because I'm offering, as I did for AMC, I pressed AMC to be able to raise money and be able to buy back bonds. I'm pressing GameStop to be able to reinvent the company. Why are these things so bad? Because it's who I am. They just think I am someone who wears a suit, who's older, who's manipulated the markets, and I've not. I've given examples of what people do. But all I can tell you is that it's tiresome to be able to come out with what they should realize is good and they think is bad. And I am directly reaching out to the Wall Street bets people to rethink about how they feel about what I'm saying and what I'm doing, which is to make it so that there are genuine ideas, to make it so GameStop can go much higher. And if you castigate me and think that that's wrong, I don't have any time for you. And if you continue to put up things that make me want to block you on Twitter, that's fine. But you should understand that I am for you. And I am suggesting the things that could make these stocks go higher. And that if you don't think I am, I really think you got to rethink your game plan because it makes no sense.
Well, and Jim, I think that this leads to the larger conversation that, I mean, I don't want to say media because I think that term is too convoluted nowadays and it's too broad. But I think that for you and I, our roles here, it's to look at the general theses that we see on Wall Street bets and that these investors have and to say, okay, here's the thesis that you have and here are the facts that we currently have. Here's where the balance sheet is. Here's what the company's currently doing. Here's the different moves that they're making. And here's what it could mean for them. But we haven't quite, as you noted, we haven't quite seen that turnaround yet. Yes, GameStop in a year, GameStop in 5 years could be a totally different company than it currently is. But it's the steps that we're watching, the steps that they're currently taking before saying before you say, for example, Jim, buy. You know, like you're giving the facts first.
Well, look, I think that when you looked at GameStop, is the stock up significantly? It's up 861% this year. It's most, I think, of any of the larger cap stocks. It's not at 483 anymore as it was during the heyday at the last week of January. But you could argue that it's up substantially versus when a lot of insiders, including a man who's on the committee, the strategic committee, where he sold stock up dramatically. So why not raise money? Now you could say, and I'm sure the Wall Street Bets people say, they're raising money on our own backs, and that's not right. Or they could say, look, there's 18% short, and this is going to ruin the short bust. But it's not a zero-sum game, and it's not taking money from guys like me. I'm not involved at all. I'm trying to get it so that Ryan Cohen is able to make the company into far more than it is. I mean, I've suggested crypto. I've suggested be a clearinghouse for all the different currencies. I suggested maybe even be a bank for them so you can open up an account. Maybe they affiliate with Robinhood and open up an account, or PayPal or Square. I've offered so many different things. What have the Wall Street Bets people offered other than diamond hands and making fun of me? And I encourage them, if they still feel that that's the way, to read what I've said and understand my view about how to get the stock back to 300. And if they don't, and they just intend to attack me, I mean, what a waste, because they're all going to be blocked. I mean, what's the point? Jimmy Chill blocks everybody. He doesn't fight with them. He just blocks them.
Jim, I'm smiling because I actually think that this conversation feeds so perfectly into what you were writing this morning about the acceptance page, how we're hurting the individual investor. Now, this was based on your real money column, as I just noted. And one thing that you said that really, really stood out to me, Jim, was that you state the media has done a real disservice, and so have the pros, to the individual investor. I mean, that's a strong statement to make.
The media is willing to accept this crap that it's value. I mean, I know better. I mean, okay, we've been buying Union Pacific for action alerts, okay? I mean, classic transport. It sells at 28 times earnings. That's a value. That's growth at a reasonable price. That's what it is, versus growth at an unreasonable price. And so when we say that, and it hit an all-time high today, what we say when we say it's value, that makes people say, oh, I want very inexpensive stocks versus what I'm buying. No, you want companies that have year-over-year better numbers, because that's what moves the stock. And again, I implore people to recognize that professionals, that when you say value, you better understand what value is, because almost no stock that you're buying is based on value now. The multiples are all incredibly high. If we happen to have a gigantic second quarter, maybe some of these companies will find their multiples justified. But in terms of value, I mean, that's crazy. These companies aren't value. They're very expensive. But they are growth at a reasonable price versus what a lot of the Robinhood types were buying.
Well, and Jim, I think that this kind of segues into a conversation that I know you and I have had both on camera and off camera about what the financial media especially could be doing to better reach the individual investor, so that another GameStop Wall Street Bets situation doesn't kind of, take off in the way that it did, and was in some cases, honestly, was misreported. So what, in your opinion, should the media financially be doing differently?
We need to do more teaching. There is no teaching. I was talking to a 16-year-old the other day. I said, what do you learn? What do you know about stocks? Nothing. What does your class know about stocks? Nothing. Younger people don't understand what investing is. There are many people who started investing when they got their first stimulus test and check. What they were doing was betting. And what we have to do is explain longer-term investing and why you might be interested in certain companies, but recognize the risks of those companies. Suitability, telling people that, listen, maybe options aren't right for you. Here's a better way to do it. If we teach diversification, which I try to do, we can avoid these things. We avoid the acceptance of positions that aren't going to come back. And they're not going to come back to where you bought them necessarily, because they were so high. I mean, I got people, look, I have to struggle with AMD. Okay, AMD is not doing well today. It's down 5 cents. But someone in my mentions column in Twitter said AMD's tanking. Well, I mean, that is just the kind of nutty things that I see. Now, GameStop is starting to do the right thing. It's coming back. That's what should happen, because if you're in GameStop, you got to justify the market cap. Justifying the market cap of a Churchill 4 when it's at 58 is not possible. Justifying the market cap of the amazing, and I happen to really believe, QuantumScape, which is down 40%. If you bought that, this is probably what a lot of individual investors did. You're down 40. Let's say you bought this thing and you're down 35%. Well, you can hope that it gets back to 36 billion in market cap. Maybe Jagdeep Singh does everything right, but maybe that was priced as if everything was right. So what I'm saying, Catherine, is that I really want people to recognize you haven't won. You haven't, if you beat the shorts. What investing is about isn't winning. It's about making money over time. The people who are short term and always use these rockets and stuff and hands and diamonds, and that's all fine. I don't mind any of that. But they've got to realize that investing for the long term means buying a stock like Alphabet and waiting for a day like today where it's up 65. Great Peter Lynch used to say, listen, if you don't stick with something, what's going to happen is that you're going to be you're going to miss the big day. Now, I'm not against, as I said this morning in Real Money, I'm in favor of investing. I'm not in favor of trading, and I'm not in favor of betting. And I think a lot of people were betting, and they've been revealed as people who are not making nearly as much money as the people who are investing, particularly if the investments are diversified.
So, Jim, I'm looking at your Twitter from this morning. There was a specific tweet that I want to talk about, and that's your tweet about Tesla, which you say that Tesla takes over the EV sector currently, but the inclusion of all of these other SPACs is concerning. So what's the first step that investors, because we're talking so much about education, what's the first step that investors need to take?
One of the things I've learned over time is if you think Tesla's a great stock, don't reinvent the wheel. Go buy Tesla. Don't say, okay, I'm going to buy Lordstown. I'm going to buy Romeo. I'm going to buy the blank check charging station names. I'm going to go buy QuantumScape. I like QuantumScape, but this is not a reason to buy it. And don't necessarily buy any of the stocks of companies that make different parts of EV. It makes no sense. But people do it. They want to find the derivative of Tesla. And I say stop looking for the derivative. Just go buy Tesla. Tesla is a great company. The Chinese numbers are terrific. The overall demand could be north of 800,000 cars. They could make 1 million cars. That's a real company. And I just feel like that people just don't understand that when you are looking at what's working with Tesla, that means buy Tesla. It does not mean buy Churchill 4. It does not mean buy Fisker. I like Fisker and I like Lucid, which is Churchill 4. But, when I see Tesla having a great number, Catherine, buy Tesla. That makes the sense. Makes the most sense. Buy Tesla.
I want to take this opportunity to jump into applied materials because this was your mad dash this morning, Jim, and you're looking forward to the analyst meeting tomorrow, and you even noted that the meeting could be defining in your words. So what's your advice to investors who currently have this name in their portfolio?
Okay. Applied Materials makes the machines that you need to eliminate the shortage, as does Lam Research, which is actually doing better than Applied Materials, and as does KLA, also as ASMLF. And what people have to do, we sold at Lam Research too early. I've made a lot of money in it, but people have to recognize that we have a terrible chip shortage, and that's hurting. I mean, we own Ford Fraction Alerts. Now, Ford is up 3%. Okay. Now, it would be at 15 right now if it weren't for the chip shortage. But there's a lot of companies that are being hurt by the chip shortage, and the autos in particular being hurt, and that's the biggest pain. But I think that you can stick with Ford because I do believe that some of the shortage will be alleviated. I spoke to Micron last week, and they're seeing tightness throughout the food chain. But I know that Ford has specific low-end chips. NXPI, by the way, which is now 212, is the way if you want to do the semiconductors. That's the one that they have the autos. They have the auto chips. But I just think that this chip shortage is going to be with us, and I don't want people to get too excited about Ford as much as I like it, because they can't have upside without chips.
And now I want to switch lanes once again and focus in on Facebook, Jim, because per Business Insider, 533 million Facebook users' phone numbers and other personal data was leaked online. Now, the caveat that I really want to stress here is that the company says that this was first reported in 2019, but 500 million, if we're being quite frank, is no small number. And since cybersecurity is such an increasingly worrying issue, Jim, you own this stock. What do you make of this news?
You just stay long it. I mean, we have a nice position in it, and the stock is hitting a high here, and that's because business is so great. And one of the things that's happened, I know people hate FANG periodically. I always come back to not, oh, I like FANG. I say, how's the business of FANG? And the advertising business is on fire for both Facebook and for the G, which is Google. And both stocks are reflecting phenomenal ad sales for the first quarter, and that's what's happening. And that's because a lot of the consumer product goods companies just don't know how to reach people if they don't go to Facebook. So I think the Facebook up 9, up 3% shows you that people are not concerned about the leak.
And when I say you invest in it, Jim, I meant that Action Alerts Plus invest in it. I want to be very clear about this because I think that this is a great opportunity to kind of talk about Action Alerts Plus in a way that I'm getting a lot of DMs, and I know that you do too, Jim, of like, tell me a stock to buy. What stocks are you invested in? And the caveat here is that you and I are journalists. We're reporting on stocks, and you, through Action Alerts Plus, can invest. And that's what makes this so special. So let's talk a little bit about, besides for the Daily Rundown show, which is our exclusive show that you and I do over there, let's talk a little bit about what Action Alerts Plus is and kind of give the younger investors in my DMs who are really curious about whether or not they should spend money on it, why should they?
Well, one of the things we've learned is that if you're going to invest, you have to invest wisely. You have to know companies. You have to know the details, and you have to know yourself. And what we do at Action Alerts are present a list where it's a club list of the stocks we like, and that people can take a hard look at and decide which ones they like. I consider it a menu. Obviously, there's 30 stocks and change. You can't own all of them, but you need to look at them and see what we say about each one. It's the only education product out there that's real time, real life. And we tell you what we're going to buy before we buy with a full explanation. And I think that, yes, it's great. I've given away more than $3 million since it started. But what this is the product you need as an individual, because I think a lot of people, when you look at what they bought in the month of January, they bought things that they hope will come back. But they are all in the same cohort. They're all these growth stocks that have a very price to sales, very high level. I mean, really kind of stupendous level. And what I am saying is that if you are trying to learn and pick certain stocks, Action Alerts was created for you. Now, I turned it into a club because I think people didn't understand. I can't do a lot of the recommendations because I have specific rules about what I can and can't buy, all of which are have to do with the timing of not being able to take advantage of you if I mention something on TV. But the main thing about this, and I really want people to understand this, is that if you are trying to figure out what a company does and what a stock does and how they're different and how a stock can be the right thing to do at a certain level, then Action Alerts is for you. Remember, I created for you. And there is no other product that shows you real time what money managers do. There's lots of products that don't, and there's lots of money managers who won't tell you because it's too embarrassing. I've been around long enough that I am perfectly willing to be embarrassed in the name of teaching. So it is a different kind of product, very hard for people to grasp because I really am, in many ways, a money manager working for charity, showing you what I'll do. And I think that people should take a hard look at it if they're trying to figure out how to get away from just owning SPACs and tech stocks and GameStop. You can own some GameStop, but not all GameStop. This will help you.
You know, Jim, I completely agree with you because I was asked to find a way to talk about with you how AAP is different from other products. And quite honestly, I was thinking about that question and I was like, there is nothing that compares to it.
When I started it, people laughed. They said, listen, no money manager worth his salt will ever reveal. The product will fail. Who would ever reveal that they made mistakes? Who would ever say, you know, look, I bought the oils wrong or I bought this stock too high? We do that all the time. We don't try to make a lot of mistakes, but I'm saying we show you what we've done right and what we've done wrong. And I just think that people don't understand the uniqueness of the product. No one has it because it's too embarrassing for people to reveal their mistakes. I don't care. I have rhino skin. People can make fun of me, and that's fine. They make fun of me on Twitter. I can block them. But this is a product that if you're trying to learn and you want to keep a portfolio up to date, we do the work for you. There's nobody else does the work for you anywhere. Not a brokerage house obviously wants your commission. Money manager obviously wants 1% of yours. We have a fee, but the amount of work we do for the fee is insane. So I am urging people who are trying to figure out how to do this right, not how to bet, but how to invest. They should be members of the ActionAlertsPlus.com club.
And they should sign up before April 8th because at 11:30 a.m. later this week, Jim, you and Zev Fema and Jeff Marks are working hard to bring the members-only club call, which happens once a month, to life. So we look forward to that. With that, let's head on over to our Action Alerts Plus daily rundown show over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.